Welcome to Anafram Market Perspectives.
S&P 500 weekly recap. Tech pops. Tariff-tied names. Drop markets opened the week on shaky ground, and by Thursday, the losses were widespread. The S&P 500 dropped 3.5%, the Nasdaq fell 4.3%, and the Dow Jones slipped 2.5%. Biggest losers? Apple slid over 6% on fears of Chinese retaliation. Tesla dropped nearly 6% after Wedbush slashed its target. AMD and Intel fell under pressure from Beijing's semiconductor crackdown. Nike also sank on exposure to Asia-based supply chains, and healthcare was hit hard, with names like Pfizer and Lilly down more than 8%. But there were winners too. Nvidia jumped 5.7%, and Broadcom surged nearly 12% as dip buyers returned to semis. Microsoft and Meta bounced back 2 to 3% after last week's sell-off. It was a split market. Strong tech found footing, while autos, banks, and cyclicals cracked under global policy stress. Trump's tariffs, a 72-hour whiplash. Let's talk tariffs. Trump's reciprocal tariff campaign took center stage. Here's how it played out. April 2nd, 10% tariffs hit all non-USMCA imports. April 3rd, a 25% auto tariff went live. April 10th, Trump hiked China's tariffs to 145%, but paused others for 90 days fallout. China hit back with an 84% tariff on U.S. goods and banned Hollywood films. The EU paused retaliation, but warned of digital taxes on big tech. Japan, Israel, and South Korea are negotiating exemptions. Wall Street leaders like Jamie Dimon and Ken Griffin slammed the tariffs, calling them a tax on consumers. Meanwhile, consumers began stockpiling essentials, fearing price hikes. The trade war isn't over. It's just paused. And the economic damage already starting to show. Economic recap: inflation cools, but so does growth. Some relief came from inflation data. March CPI fell to 2.4% year over year. Core CPI eased to 2.8%. And PPI confirmed cooling prices at just 0.2%. But don't get too comfortable. Consumer sentiment dropped to 54.0. Fed budget deficits are deepening, and global growth looks shaky. China's inflation is now negative, and Mexico's CPI held at 3.8%, putting pressure on their central banks. Bottom line, inflation is slowing, but growth is too, and the Fed is cornered. Volatility watch. VIX spikes again. The VIX jumped to 35.65, its highest in nearly a year. This isn't just hedging, it's fear. Bonus section. Monday's picks. How did they do? ETF, VXX, iPath, VIX short-term futures. It surged early, closing around $79.63. Still trading above the Ichimoku cloud, but momentum is fading. Good hedge. Now might be time to take profits. JPMorgan bounced back to $226.93. Still below the cloud with a weak MACD. Stable, for now, but Friday's earnings will set the tone. Constellation Brands closed at 184.73, reclaiming key levels. MACD is turning bullish. Looking stronger, earnings confirmed a positive shift. Final takeaways. This was one of the most chaotic weeks of 2025 so far. Tariffs are hitting hard, especially on China, and even with a pause, the risk is far from over. Inflation cooled, but sentiment is fading fast. Markets are skittish, and the VIX tells us volatility is here to stay. What to watch next week? U.S. retail sales. Key earnings from tech, banks, and auto. China and EU retaliation updates. We'll see you Monday with a new market preview. Until then, stay informed, stay strategic. This is Anafram Market Perspectives.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives. Next next time on Anafram Market Perspectives.